All right, several weeks ago, I noted that there were two scenarios that were going to happen. We were getting late in the daily cycle, but there was a FOMC meeting on the 28th right here, and so one of two things could happen. Either the market would drop down into a daily cycle low naturally ahead of the FOMC meeting, and then it would be rescued in time for the market to be moving back up and probably back at all-time highs in time for the FOMC meeting, or the Fed would just pump a bunch of money into the financial markets and hold off the daily cycle low until after that FOMC meeting. We also had the State of the Union address, and of course they're not going to let the market fall the day after the State of the Union. So turns out the daily cycle low is um, going to occur, and it is occurring uh, after the FOMC meeting and after the State of the Union. So, um, ignore the perma bears. They're going to they're going to call this a double top, and that the bull market is topped, and this is all nonsense. This is a move into a daily cycle low. It's way overdue. It was held off um, artificially longer than it should have been, which just means that the move down tends to be more aggressive and more violent. If the Fed had just stayed out of the market and let the market run normally, we would have gotten our daily cycle low right here, and we probably would have bottomed on the FOMC meeting and would be, on our way back up. But um, in our modern managed markets, this is just one of the things that you have to take into account. But um, again, let me stress: don't listen to the perma bears here. This is not the top of the bull market. This is just a daily cycle correction. They usually only last 5 to 8 days. Um, my best guess is we've got an employment report on Friday. That's likely to be a trigger event. Now, we should break this trend line. Um, that's one of the confirmations that we're heading into a daily cycle low, is they almost always break the trend line. So, I don't think we're going to hit a bottom today. We probably have a little more to go. But I think by the employment report on Friday, um, we will either have gotten a bottom. Very, very often what happens is you get a bottom like on Thursday, and then the market turns um, and goes back up on the trigger event, which would be the employment report. But the actual bottom occurred like maybe the day before. Sometimes it can occur the day after, but um, all that is happening here, let me widen the chart. All right, so all that is happening here is that we've had just a monstrous move out of the March bottom here. We had a period of sideways consolidation right here, and then we've had another monster move after the election, and we're getting another sideways consolidation. The Nasdaq has kind of gotten stuck at 14,000. It hasn't been able to produce a sustained move, a breakout above that. And I warned right in here that these breakouts that come late in a cycle tend to fail. That's what's happening here. This breakout above 14,000 came very, very late in this daily cycle, so the odds were that it was not going to produce a sustained breakout, and we're getting a move back down. We're just going sideways and allowing this 200-day moving average to catch up to price. That's all this is. This is not a final top. And um, once this corrective move, this daily cycle low is over, and like I said, I think there's a good chance it could be over maybe Thursday. Um, you want to be prepared. You want to be leveraged, because the next daily cycle has pretty good odds that it is going to break out above 14,000, and it's going to do it early in the daily cycle, which means it's going to produce a sustained move. And at that point, we may be ready for the final melt up phase of the bubble. So just to give you some idea, this is the 2000 bubble, and you can see we had a very long period of sideways consolidation from early 99 until October of 99 before price really broke out above that consolidation and took off into the melt up phase. I think we're probably in this final consolidation phase right here, right now with our present market. And once we complete that daily cycle low, then I think we probably start the melt up phase. And that my best guess is it probably runs to October, maybe September, and then the initial crash off the top of the bubble probably is going to come in the fall when we tend to get market crashes quite often. So control emotions, understand what's happening. We're just in a consolidation phase in preparation for a final breakout above this 14,000, one that will be sustained and one that will give us the final, what I think is going to be the final melt up phase in the bubble, where we stretch price 40 to 60 or maybe even higher percentage above this 200-day moving average. But we just need to complete this corrective process first. Like I said, I don't think it's done today. Maybe we bottom on Thursday, maybe we bottom on Friday, but they don't last very long, 5 to 8 days. We're already 4 days into this, so we should be getting pretty close, and probably by the end of the week we're going to be done. You need to get leveraged and in position to play that final melt up phase at that point.